Hey, Steve Saretsky here. Welcome back to the show. Quite a few things to touch on this week. We've got Canada's CPI headline inflation. We've got some data prints there. We've got some commentary from various levels of government. So I want to kind of dive into some of their comments as well. But I want to frame up this week's episode with Canada's CPI inflation data because it's really something that we've been talking about in the show for really almost 2 years now, right? I mean, the early days when inflation was still showing low and we were talking about rampant inflation and house prices were going up, 30% on an annual basis. And nobody in the government or media was talking about inflation. I think we were there. We were first on the ground. And, really over the last 6 to 8 months, I've been kind of the view that, listen, guys, rates going up as aggressive they are, it's gonna do the job. Mostly because you've got this highly indebted global economy, and particularly here in Canada, the levels of debt that rising interest rates would cause stress, and it would eventually slow things down. And I think there was a lot of base effects that we had to get through, and so. Seeing now, putting out the even thought that coming into this year that we'd have 3% inflation by this summer, the commentary in YouTube and on Twitter was just so much anger and hate and calling people names and saying you're an idiot. And so we had Canada's CPI inflation coming in. The number was 3% expected. We came in at 2.8%, again, year over year. So base effects, I get it, before everybody gets all upset and angry. But the reality is you've gone from basically a high of 9% inflation. We're now down to 2.8. We can get into some of the base effects of this thing here. But, people are saying, well, now the number's massaged. It's not correct. We know that CPI, as it's recorded, underreports inflation. We've known that for a decade plus now. It's a stealth tax from governments. But the reality is that's what it's showing today. And if you don't believe it, I would really encourage people to go look at the site trueflation.com. Now, again, it doesn't have Canada, but I would argue that Canada has a similar rate of inflation as the U.S. And so right now they're tracking Trueflation in the U.S. at 2.1%. Again, I think from a high of 12%, Trueflation had it at 12, so higher than government stats. Trueflation peaked at 12, is now at 2.1. I think we can all agree that, yes, it is true there's been a lot of inflation over the last 24 months. It is true the cost of living and affordability is completely out of control. It is true that prices are not falling, but they're not going up as much anymore. And so the pace of inflation has slowed. Again, prices are still going up. 2% headline inflation means prices are going up 2%. So they're not falling. So we have disinflation. We don't have deflation. But this matters from central bank policy because, again, the central bankers are simply targeting a 2% inflation. So they're not going to claw back what just happened over the last 24 months. We had a massive amount of inflation. But, we had 2.8% headline inflation. If you strip out mortgage interest costs, again, people will get upset about that, but mortgage interest costs, which are controlled exclusively by the Bank of Canada, were up 30% year over year. And so if you strip that component out, you now have headline inflation at 2%. But even if you don't strip it out, the headline inflation at 2.8 is within the Bank of Canada's target range. While they have a 2% target, they have a range. They are allowed a range. They have a range of 1 to 3%. So this is certainly a number that the Bank of Canada is going to be happy to see. Now, we do have some base effects. Yes, gasoline, oil prices were a large component for the reason why inflation came down. And I think there's certainly a bull case, a strong thesis that I think there's structural support for oil prices moving forward. You guys know my view on the Calgary housing market for quite some time. I think it kind of coincides with that. So I think there's very much a probability or likelihood that those base effects are going to go away, and you could see inflation pop back up to 2.9, 3.1% next month or 2 months from now. But regardless, it has sort of come back down to that range, and I would argue that there's components of it that are going to come, and they are massive lags. One of them being food prices. I think on the Loonie Hour, we did like 4, maybe 5 episodes ridiculing Stats Canada because I think it was towards like the end of 2021 they had like food prices were up like 2.5%, 3%. And there was a lot of good research showing that food prices were up about 9 to 10%. And it took a long time for food prices to actually filter through. And so right now they're still up 8%. So everybody's reading these headlines and saying grocery prices up 8% year over year. And everyone's still freaking out and saying, see, we need to get this under control. But if you actually look and unpack it, there was a massive, massive lag in food prices on the way up. And I think there's going to be, and there is a massive lag on the way down. Food prices actually grow on a month-over-month basis, growing at the slowest pace in a year. So again, I think most people can agree when they go to the grocery store, it's still egregiously expensive. This has destroyed a lot of the lower middle class. But I think we can agree that food pricing inflation has moderated in most categories. But again, this is not to say the damage hasn't been done. It's just that food prices are lagging. They actually tend to follow fertilizer prices, and input for fertilizer prices is energy prices. Again, so think about the lags, right? So fertilizer follows energy prices, food prices follow fertilizer prices. And so these are the lags that I want people to pay attention to, because again, if your thesis is, well, I think Canadian real estate's got another leg down because of all these debt and people are going to start defaulting. Well, again, people suffocating under debt and struggling to pay their debts and defaulting, bankruptcies right now are going up, consumer proposals are going up. We know there's some stressed mortgage holders that are going up. That's disinflationary, that's deflationary. And so I still think, given the amount of debt in the system, I still believe that while most people don't believe it, I still think there's a strong case to say that we're going to get some more disinflation over the next 6 to 12 months. I also believe that there's a strong case to be made that you could very well have a second wave of an inflationary impulse, because I think that the fiscal spending side of things are completely out of control. And so this comes back to the argument that, higher for longer, right? Like, are we going back to 1.5% mortgage rates? No, we're not. But, 6%, maybe we're back down to 4% in 6 to 12 months. Maybe it's 3.8. I don't know. These are just opinions that I like to sit here and pontificate about, because the reality is nobody knows. And it's funny to sort of see all the commentary. Everybody seems to know the direction. I mean, we've basically got Fed funds at 6%, and you got the S&P almost back to record highs. I struggle and say, well, how many people had that kind of penciled in coming into this calendar year? And so just kind of goes to show you that markets can be difficult to sort of pontificate about. What I can sort of get a clear guidance on is, again, we're still struggling on the inventory side here on housing. Housing has slowed dramatically, but there's just no inventory. It comes back to my video last week that people are really, there are people, I'm not advocating for higher rates or lower rates. I'm just saying what is happening in the market today is people are actually stuck in their homes. So there's people that want to move. Maybe they want a new location. Maybe they want better views. Maybe they want an extra bedroom. They actually can't move because they can't afford to upsize. And so there's just not enough transaction volume happening. So people that would normally sell a place to move up to a place, or sell a place to move locations, they actually can't move. And so the inventory isn't coming on, and the sales aren't really happening either. So just very low transaction volumes. And that low inventory base has ironically artificially supported the prices. And that's why pricing really hasn't moved, despite mortgage rates, again, at 6% today. It's unbelievable. I did not have that penciled coming into this calendar year. If you told me mortgage rates will be at 6% and house prices will be up on the year, I probably would have said you were crazy. And so again, I think this will probably sort of shake out at some point, but this is the struggle that we're kind of working through. But you can see, again, all these politicians starting to panic is interesting. We've talked about these fixed payment variable rate mortgages coming under duress, people just sort of leaving them, kicking the can down the road. You've got OSFI, which is the banking regulator, on one side saying, the banks need to start figuring this out. They need to hold more capital against these mortgages now. And then you've got the FCAC, which is Krista Freeland and the Liberal government, saying, no, banks, you guys need to work with these borrowers, start extending these amortizations. We don't want people on the streets. We don't want people losing their homes. We got an election. We have an election coming up in 2025. We need the housing market to be solid. We can't get reelected if people start losing their homes. So FCAC, directed by Krista Freeland, says, please work with these people. And then you've got the NDP, which I will remind you has a coalition with the Liberal government. Here's their recommendation for the housing market.
Well, we know that people are feeling this across the country, and people are feeling this here in Windsor. I've spoken to people. They're saying, what do we do? The mortgage rates or the interest rates have gone up so quickly and so rapidly in such a short period of time. We are struggling right now. And I gave that example. If you were a family in the past couple of years that has a 25-year variable mortgage, you're looking at your mortgage payments and seeing an increase of over $1,700. How is a family supposed to come up with an additional $1,700 when grocery prices are up, when gas prices are up, when everything is more expensive? What are families to do? And the relief offered by the Liberals is just not good enough. And it's not surprisingly because they're not in connect. They're out of touch with what people are really going through. And the Conservatives are not proposing any solutions immediately right now to give people relief. They don't care. They're not actually talking about that. We're talking about what we can do right now to give people relief. There's a lot of countries that are looking at real solutions to give people a bit of break who are struggling with the cost of the mortgage. We want to see those aggressive steps being taken here in Canada. Steps like Spain has taken to force banks to give lower interest rates to families that are struggling. Like Portugal has put in a subsidy for people that can't pay their mortgage right now. We need to see some aggressive measures put in place to give people some relief, to give people a break so they don't lose their homes.
Jagmeet Singh, who would argue is, left-leaning, that caters to is supposed to cater towards sort of more of the middle class, the renter base, is arguing almost for subsidies or bailouts for homeowners that have really, I'd say homeowners in Canada have had it so good, so great for the last 15, 20 years, particularly, the massive asset price inflation. This guy is calling for taxpayer dollars to be used towards subsidizing people that over-levered themselves. This is a horrible, horrible idea. But it's interesting to sort of see where these politicians' mindsets are at, that you've got, again, the Liberal government and the NDP government, which I would argue are the same thing. There's a coalition to work together, arguing for similar policies to sort of aid these homeowners. And so I do worry that the fiscal spending and the taxpayer dollars are going to be put to use to something that they should not be used for. I think we can all agree housing has had a tremendous run in Canada. It's okay. It's okay to allow a little bit of pain. It's actually a healthy component to allow some flushing of the system to cleanse out malinvestment. It's okay to allow some of that. And so I would really caution politicians, anyone watching this video that maybe votes for these people, or I know we've got politicians that watch these videos. The unfortunate thing with inflation and with high house prices is sometimes you have to allow a little bit of pain for things to get better. And this system and this process you have to go through. Inflation is hurting the lower middle class. Higher interest rates are hurting the lower middle class, or the people that over-levered, that don't have the income and the flexibility to actually increase their payments. But this is the reality of capitalism and cycles, is that you allow defaults to happen. Obviously, you don't want them happening at scale, but they need to happen to allow that cleansing. So that's kind of how we are in the summer market, kind of the dog days of summer right now. Again, not a lot of activity, not a lot of listings, not a lot of sales, things just kind of muddling around, inflation slowly coming down. I think faster than most people would have expected. We're now going to watch all sorts of components, global macro components, which are very difficult to predict, and see how they juggle out over the next 3 to 6 months. I still think higher interest rates, mortgage rates 6%, is disinflationary. It takes time to work its way through the system. The thing about this is that you've got headline inflation back down to 2.8, and interest rates, I think we can all agree, haven't actually fully worked through the system. As we know, only about 1/3 of Canadians have actually seen a mortgage payment increase. And so again, that's just one more example that as these rates start filtering through, I still think these debt loads are going to be disinflationary, which will help to offset potentially volatile energy prices over the next 12 months. So anyways, thoughts, opinions, could be wrong. Always encourage people to do their own due diligence. That's kind of my thoughts on the housing market, on markets in general right now. See you next week.